Thanks so much for taking out time for us. There is a very interesting digital report that you have released of late, which has made headlines across wires. And one of the main reasons is, like the global tech market, you have introduced an India tech market word, or potential India tech market word. Can you just tell us about the thought for those different 5-7 power companies?
Yeah, so, thanks, Pankaj. I think the perspective is very simple, that I think all of us agree and believe that digital economy is going to be scaling up in India and is here to stay. So the point is that we are still at a very early stage of evolution, especially in the public markets. But we felt that this was a stage where this entire future perspective needed an identity. I call it as a digital identity for India. And hence we decided to coin an acronym called POWRZ, which is POWRZ in order to represent the emerging areas in the new economy world, and also to represent some of the companies which are potentially getting listed in the next 12 to 18 months. So P, for example, represents Paytm, which is more to represent fintech in general. O is, of course, Ola, which includes cabs as well as electric business of theirs. W is Walmart, which is a representation of Flipkart. R is Reliance, Z is Zomato, and S represents actually Swiggy, as well as Byju's, because it ends with apostrophe S. Now, one thing I want to highlight as a caveat is this was not really a call on these companies. This was primarily to represent to the world that India will eventually have its own bank. It's just a matter of time. Number two, we do believe that as companies emerge, as these spaces evolve, there'll be a shuffling in terms of leadership in each of these end markets itself. So the acronym itself would evolve, but we wanted that it was essential at this stage to have at least one such representation.
So, you've also done some analysis of Nifty 50 and how the sector rotation happens over there. Right from 1990s, whether it was, what's happening with some of the capex companies, some of the, other exporters, and then banking probably as well. Can you just take us through how, every 10, 15 years you see a massive shift as far as weightage or high weightage of Nifty is concerned?
Yeah, so Pankaj, the main perspective here was that we were trying to define the digital economy's relevance in terms of market cap 10 years later. We were basically saying there's a new sector getting created. It would potentially have at least a 20% plus impact in terms of index mix in 2030. Now, the context was that if I look at from 1995 onwards until now, there has been several changes in sector leadership from time to time. Now, there are certain cases where you tend to see new sectors emerge and sustain, the sort of scale. IT service is a classic example. In 1995, it was not present in the index. Exactly a decade later, it was 20% of the index. I don't think anybody would have thought in 1995 that IT would have such a large mix of the index a decade later. Now, it's interesting that post that it still continued to have a mid-teen sort of a mix in the index, and that's probably because it's a secular sort of a growth end market. But having said that, from period to period, which is a 5 or 10 year periods, we've actually seen a lot of changes. So for example, energy and utilities became relevant in 2005, while industrials became relevant if you see the mix in 2010. So there was a fairly large scale up out there, but both have seen a significant shrinkage in terms of the overall index mix. Similarly, pharma, for example, 2010 to 15, big jump, and thereafter a scale down. So the point is this, that in longer periods of time, which is 5 years or 10 years, there are two main drivers. One is cyclicality within end markets, which could be macro-led or specific, bottom-up sector-related drivers, which lead to a scale-up in those sectors. And number two is primarily there are potential for secular growth sectors to emerge from time to time. That's not really an easy task, but they do emerge. For investors, I think beyond the day-to-day, sort of investment views that we would take, we would want to be in a position to identify some of these broader emerging trends and try to participate in those as early as possible. And that's what gives you, significant multi-bagger opportunities.
So, when we just talk about the technology pack or the digital age technology pack, where do you see, the recent listing of Zomato, some of the others like car trades have happened? You think it is just the beginning of, people allowing to get participated into this big theme that is growing pretty fast?
Yeah, I mean, I'll put it this way that we are still in a fairly early stage. There have just been a few listings. You would see listings accelerate, and you're going to see quite a few of them over the next 2-3 years. Now, one thing to definitely observe is that one cannot fight against this view that liquidity has had a significant role to play in bringing forward these listings. Because a lot of these companies would have eventually listed, but in a couple of years time frame, they're all sort of preponing their listings largely because the public markets are offering you a relatively better valuation paradigm than what private markets can offer. So why not, right? So that's the reason why you're going to see a flurry of companies getting listed, which is in some way good for public markets as well.
Right. Now, when we just talk about Zomato, the market cap itself is 1 lakh crores now after listing. Listing itself, people were talking it's quite expensive. And then, it almost doubled from there. So do you think, one has to be very, very selective? And also, this business may not be like manufacturing businesses. It may be winner takes it all. So one has to be very careful that the success rate could be as difficult as how, some of the valuations are factoring in.
Pankaj, that is a very valid question. I think these valuation metrics in general that we use for new economy, tend to be very tricky. Now, to give a context, where some of these stocks trade today doesn't really surprise me because the way it works globally as well is that in emerging markets, we tend to see relatively higher valuations for new economy. Now, this is primarily if you look at stocks from an ASEAN perspective or LATAM, even if they're listed in US, doesn't matter. If they're exposed to those end markets, you tend to see relatively higher valuations than stocks which are exposed to, let's say, US or China. Now, what is the primary perspective or driver behind it? Firstly, is the fact that these, the EM, particularly even India, is at a fairly early stage of scale up. So people do believe there's a longer headroom for growth. The second thing is since the entire tech end markets have not fully evolved, there is also this expectation of, as we call it, as option value, where one of these companies which is successful in one end market could potentially also attach an adjacency by launching, let's say a new offering. Now, that's easier said than done. It's not an easy task moving from one end market to another, and there have been a lot of failures, over the last 7-8 years in that respect. But nevertheless, market does give sort of an option value as well. That's why you tend to see relatively larger valuations for companies in EM, including what you're seeing in India today. But how is it going to change is the most important thing. I think the perspective is that you're going to see a lot of listings, right, over the next couple of years. So in some way down the line, investors will have a choice, in terms of picking and choosing which companies they believe are the ones which are going to scale up disproportionately in the long term. Now, that is what you want to choose. And what, as you rightly said, you can't have 5 companies in each end market scaling up disproportionately. It will be 1 or a maximum of 2. So you're talking about just 6, 7 companies or 8 companies at best over the next decade, which could give you disproportionate value creation irrespective of what valuation you get in today. Now, that's a task which might be too early at this juncture to take a call on that. But in the next 2 to 3 years, this is what we all need to do to identify those companies and stick with them.
Thank you so much, Venu, for taking out time for us talking about the new digital age. Of course, after Zomato listing, there has been a lot of action as far as digital space is concerned. And of course, as Venu pointed out, that a lot more are lined up in the next coming year as well, right? From fintech to edutech to, guess what? So thanks so much, Venu, and hope to see you again once you start initiating coverage on some of these companies.